All right, guys, back to work. Back to work. A fantastic day comes to an end. Boy, markets are choppy and range bound right now. We got big NVDA earnings coming out tomorrow afternoon after the close, as you guys probably already know. Now, ranges. Lots of ranges in the charts right now. They tell us three things. They love to rotate, they love breakout pullbacks, and most importantly, fake out breakouts. Those three clues, rotation, breakout pullbacks, and fake out breakouts, that tells us everything we need to make money on Wednesday morning. I have a number of trades I'm tracking for tomorrow. We'll go over all my favorite entries, of course, in this video tonight. I want everyone to have a roadmap to make some money as well. Now, before we jump in, though, to my favorite trades for Wednesday morning, make sure you subscribe to our channel. You don't want to miss tomorrow night's video, so make sure you subscribe. And as always, if you guys enjoy these videos, if you like these lessons, do me a favor, will you? Hit that like button for me tonight. And as always, give me a shout out. Give me a hell yeah down in the comment section below. Thank you guys so much for tuning in, supporting our channel. Enough of the intro, though. Where are the best winning trades setting up for what should be a very busy Wednesday morning tomorrow morning? Charts ready to go, as you can see. Nasdaq triple Qs are all ready. Oh, the E-mini and the SPY is ready. I have three very simple but important clues on these charts tonight that are telling us where I think the winning trades are waiting for tomorrow. One of those big clues is right here on these 60-minute hourly time frames. You can easily see the S&P and SPY is bullish overall. The Nasdaq and triple Qs are bullish overall. I like to use these higher time frames, 60-minute time frames, to give us the best overall direction. But I'll tell you, I have two, I think, even more important clues on some faster time frames, some tick charts, because the one thing these hourly charts don't do, they don't help us time the entry. Direction is kind of the easy part, right? The hard part's time of the entry, and I got two more important clues to help us put this all together and time some winning entries for tomorrow. And before we dive into that, the tick charts, and talk entries for tomorrow, let's check schedule, because tomorrow is not your average Wednesday. We have no major news on the counter tomorrow morning. No major news tomorrow, but we do have that NVIDIA earnings coming out tomorrow afternoon after the close. Remember, be very careful late in the session. Whenever we've got big earnings after the close, markets do weird things after 2 o'clock, 2:30 Eastern time. So think of tomorrow a lot like a Friday, right? Get in early, take profit quickly, remove risk. Be careful trading tomorrow afternoon, because again, markets do weird things, had a big earnings reports in the afternoon. Second thing on my radar for tomorrow is tomorrow we start turning the corner into the end of the month. Anytime we have the end of the month, we know volatility will tick up. And since next Monday is a holiday, a sense of scarcity will certainly creep into these markets tomorrow, Thursday, and Friday. So you can expect an uptick in volatility the next couple days here. And the final thing to keep in mind for tomorrow is there'll be no video newsletter tomorrow night or Thursday night. I'll be there tomorrow morning, of course, the trade room, 8 o'clock Eastern time. Be off on Thursday, Friday, head of that big holiday weekend coming up this weekend. So final video newsletter is tonight. There'll be no video tomorrow night or Thursday night. Again, we'll be there tomorrow morning, the trade room, but off on Thursday, Friday, and of course, next Monday is the holiday. So we'll see you guys once again here on Tuesday afternoon. Now, back to our charts though. Let's now talk our trades for tomorrow. I mentioned earlier, we're bullish overall. We know that's pretty obvious. I've got two more important clues now to help us time the entries for tomorrow. Let's grab some tick charts. Tick charts are fantastic for pattern recognition. I use those to find entries and time the best entries every morning in our trade room. This, by the way, is a 7,000 tick chart. All the time frames there, upper left-hand corner. And if you're watching for the first time right now, welcome to the channel. That yellow line right there is the 21 EMA. It is pretty much the only indicator we use to find lots of winners each week in our trade room at 8 o'clock Eastern time. I see two more important clues right now. Both of them are trading ranges. I have one big range right here. Now, ranges love to rotate up, down, back and forth. And that tells me that because we have an overall bull market on the 60-minute time frame, I would love to get some long trades going in off the 11.5 area, the low of that trading range. But there's one more range here. The more recent range is right here. We, of course, see the market pop up, pull back, and now we're running into a range right here. I would love to buy bear traps right below the low of this most recent range, because again, ranges love to rotate, right? They love to rotate back and forth like this. I would love to buy some bear traps below of that trading range. We also know too that with this same range, we might get a breakout pullback off of that high. I mentioned earlier, breakout pullbacks are a big part of the trading range game plan. So later on in the video, I want to talk about breakout pullbacks because there are a number of ways in which we can make money, avoid losses, and bank some profit on some breakout pullbacks. We'll cover that here more in detail in a moment. But let's talk about my favorite trade for tomorrow. My favorite trade for tomorrow is these two areas, that 26 3/4 and of course the 11.5 level there. There are two spots right here where I would love to find entries going long. You'll notice one of them is buying relatively high compared to the other one, right, buying relatively low. Two similar trades, but we have to structure the entry a bit differently. For example, right, I would love to get that pullback underneath that 26 3/4. What's the problem though? The problem is I'm buying relatively high. Remember, the market will want to rotate back to the low of that larger range right there. So if I buy below that 26 3/4, I'm buying technically relatively high. So this one entry pattern to look for that helps me prevent buying too high, it's called a bear trap. Now, bear trap patterns are very, very simple. I want to, as this market pulls back, I'm not going to try to blindly pick the bottom on this because I don't know. It may keep rolling down to that low and then pop up. So I can't blindly buy that 26 3/4 level. What I'd rather do is let some rookie traders come in, let them try once, let them try twice, and then because of that, now I know all their stops are right there. And if I can get that little bear trap pattern like I teach in the free video course, I can use a trap entry, strong green candle, closing above that 21 EMA to ultimately buy into those stops and get that rotation going higher. I would love to use the amount below the range, the amount above the range as a good target overhead. If I have a relatively shallow pullback, I need to make sure that my risk reward ratio is nice and right, small risk, big reward, and trap patterns, in this case a bear trap, is the way in which you use that. Now, if I see a strong run down, right, get that deeper pullback. Now the deeper pullback doesn't have that same problem, right? We're not buying high anymore. We're buying now nice and low and trying to ride that rotation back up again. But as always, there's no free lunch. There's always a problem. If I see a very strong run lower, all of that momentum is going to want to pull back and retest that low before it makes that run back higher. So the challenge we have down here is not location. It's not buying too high. We have a lot of bearish momentum. So a very small change in this. What I'll do is, because I don't know how far that will go, I'm not going to pick the bottom on this. What I do know is as it pulls back right now, this is a horrible place to be a seller, right? I wouldn't want to sell at support below a bull market into a trading range because ranges act like magnets. What I'll do is I'll let those bears try once. I'll let them try twice. Now, I'm going to use what I call a failure pattern on this. Same basic idea. Let the rookies, right? Let them jump in and commit twice. Then we know where stops are and we can buy into those stop losses. Now remember, the risk reward ratio now is perfect, right? Small risk, big reward. I'm not worried so much about a bad risk reward. Now watch closely. These failure patterns, they love to pop up, separate off the moving average, shallow pullback, separates off the moving average, and look for that same, in this case, same pattern into a bear trap combination. In my trade room, I call these a failure into trap combination. Again, it's a two-try failure so I can get those stops to run. Then as the market rolls higher, right, it's a bear trap pattern. Remember, the trick to this is it's a shallow pullback. It separates off the moving average. It's a higher high in price. And again, I want to get just below that prior swing. Nice strong green candle closing above that 21 EMA. And remember, where's a target? They love to rotate back and forth like that. So a failure into a trap combination if we can get that much deeper pullback. Now, let's slow down for a second because I know that most of you guys and gals watching right now, you know these patterns. You're making money already with failures and trap combinations. But I'll tell you, if you're watching for the first time right now, this might be a brand new strategy, a brand new language for you. What the heck are failures? How do we run stops to make money? Don't you worry. I teach this entire roadmap, the entire strategy. I have hundreds of examples, failures, traps, and a whole lot more. I cover the entire roadmap in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free video course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room so we always know where to find the best winning trades each day. More importantly, I want to help you start making money on your own, get your confidence back in your trading. I'll teach you 4 my favorite entry patterns. We make our money with the right entry timing. I'll teach you failures, traps, a whole lot more. Guys, the markets are way too good right now. If you're not making consistent money, if you're missing the best trades each day, if you've lost all your confidence in your current strategy, hit that link that popped up there. Take that free video course, learn the roadmap. It is perfect for anyone who is serious about making money in these markets. And as always, too, I'm going to put all the important links tonight, the description of the YouTube video. Grab the free class links in the description. Also, too, don't forget, we trade together every morning, 8 o'clock Eastern time. I'll put all the important membership information links, description of the YouTube video. And also, too, I'm on Twitter or X throughout the day. I'm posting charts and videos and mindset stuff on Twitter X. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more, description of that YouTube video. But again, start first with that free video course and you'll learn more about timing entries with shallow pullback traps, and you'll learn more about that classic failure into bear trap combination we love so much. Now, a couple variations of this, because that's kind of the roadmap I want. Let's talk a few more variations of this, and then later on as we go deeper here, we'll talk about that breakout pullback as we go deeper here in the video tonight. That is also a very good option for tomorrow as well. Now, I mentioned earlier, I want to get that run going down, and I want to get the bears trapped in here so I can keep that risk-reward ratio looking good, right? Small risk, big reward. Sometimes what happens is we get a real strong bounce off that low, and the 2 tries, 1, 2 happen right here. Now, it's very important that we don't chase after these types of moves. I don't want to be buying a 2-try failure right there, because now my risk is here, my reward is right there. That is no bueno. What I want to do is, if I see it bounce hard off that low, what I do is I now look for that same bear trap pattern, because now what that will do is, now that gives me now that risk reward ratio that now makes a lot more sense. All right, so if we bounce hard off of that low, don't buy as we go higher, right? Buy as it traps below that low, and again, that will give you that good risk-reward ratio you can build a successful trading career on. Also, too, one more variation, too. Oftentimes, if it bounces off that low, you'll notice we start getting this kind of grinding motion away from the 21 EMA. If the market begins to pop and grind going higher, these are very easy as long as you know what to do, because these will drive you crazy. You'll want to jump in and chase after that. If anything like me, I'm always tempted to jump in and chase after it because I want to get in before it rotates going higher. Here's what I do instead though. Watch the trend line off the high. Mark that trend line, bring it down off that low. So what it does, it makes a channel. Now look left. Find one of these prior swings. Below prior swings is where bear traps live. Below the 21 EMA is where failure patterns live. Get it back above the 21 EMA. That's where pullbacks happen, right? This should hopefully make sense if you're going to my free video class right now. Traps, failures, pullback combinations. Really, the most important thing though is if it V bottoms off that low, I want to get the first test off the low of that channel. That's the most important part. It could be any of the entry patterns we teach in the free video course. Again, I love traps. It could be a failure, a pullback combo. And again, we know where the market wants to go. It wants to rotate back and forth inside this range so you know where the target goes on the other side of that triangle. And one more variation of this, I promise. Then we'll talk about that breakout pullback here in a moment here. One more variation. We see a lot of times where we get that big rundown, we get our 2 tries, we get the nice easy failure pattern, we get that winning trade going higher, but for whatever reason, the strength of that move down, the bears come in and they retest that low. Again, remember, anytime we see a strong move lower like this, it's going to want to pull back and retest its low. That retest is a gift to the buyers right now. Because think about it, anybody who sells short on that pullback in an overall bull market like this, they're taking their profit at that low. Okay, so sellers up here become buyers down here. This is a horrible place to be selling, not in an overall bull market with a bunch of ranges as magnets up above us. So again, in this situation, we'll get our winning trade going higher. We'll take our 1-to-1 first target, remove that risk, and we'll get stopped out at the point of entry. Then as it rolls lower again, we get a second bite at this apple. Same thing. It's that 1 try. It's that 2 try. Again, I don't know how far that move down will go. It may keep going a bit further, then 1, 2, back up from there. What I do know though is this is a horrible spot to be selling. And once those bears commit to it, now I got you trapped and I can use that failure into, what was it again? It was that separation. That was the key, right? Separation off the moving average, that higher high in price. You're going to start seeing these in your sleep once you learn these trap patterns. These are fantastic money making setups here right now. That bear trap combination, it's a failure, it's a trap combination. Learn these, memorize these. I go over all the entry patterns on these things, all the rules, of course, in that free video course. So that's one more variation of this. A double bottom with a range above us in an overall bull market is right. That is one of my favorite trades. These are oftentimes the most lucrative moves because everybody's trapped short, right? Once they get squeezed, it rips up and runs higher and rotates back higher again. That's the game plan now as we go lower. Now let's talk about as we go higher, right? Because there could easily be some ways to make money going higher if you have the right game plan. How about some Nasdaq? Nasdaq's getting lonely over here. Nasdaq is very similar, of course, to the S&P and SPY. We're bullish overall on the higher time frame, but that is not going to help us time the entries for us tomorrow morning. On the tick charts right now, a 4,000 tick chart, a little bit lower time frame. The Nasdaq is less liquidity, right? Less volume. There are 2 ranges in this chart as well. You'll notice range here, the big range down bottom. Look at how well this thing rotates back and forth. I mentioned earlier on the S&P chart, I would love to get down here, right, and grab one of those failure into bear trap combinations. Second clue here is this range right here. Bull market up into a range overhead, right? Again, would love to buy below those lows. Remember, it's a shallow pullback here. Shallow pullbacks don't have good risk reward ratio. Because of that, I need to get that bear trap entry to offset that poor risk reward ratio. I don't want to buy as it goes higher. I want to be in long. That risk reward ratio is lopsided in my favor. So the exact same game plan going lower that we talked about earlier on the S&P. Now the Nasdaq though, how do we buy this thing going higher? There are 2 types of breakout pullbacks I always look for. One of them is kind of a classic breakout pullback. Watch closely here. How do you know? Remember, ranges are magnets. They love to rotate. We may go up and come right back down again and then get that bear trap down here. So keep an eye on that. Don't be gambling and chasing after range breakouts. Look what happens over here, right? Once that range forms, do not be buying above a range like this. What I'm looking for though is I want to see this pattern right here. I want to see a strong pop up and I want to start seeing separation off the moving average. Strong pop up, separation off the moving average. Repeat after me. Separation means strength. Separation means strength. When I see shallow pullbacks that don't pull back all the way to that 21 EMA, that tells me this is probably going to keep going for another leg. And that situation we'll do is look for that bear trap entry going higher. Now watch closely. Ranges, when they break out, The breakout leg is a measuring leg. So the amount of that first leg higher, once we know where the entry is or the deepest part of the pullback on that bear trap, we then know how big that target is going to be. Think measured move, AB, CD. That will tell us where to put our final targets on that bear trap breakout. Strong run up, shallow pullback, barely misses the moving average, right? Like over here, right? Shallow pullback, barely misses the moving average, right? Higher high in price, bear trap, below that low. Like I said before, you're going to start seeing these in your dreams at night. Once you see them, they're going to start popping out in the chart everywhere once you learn them. So again, that is the bear trap breakout pattern going higher. Once we get that measured move, we stop buying, we take our profit, and now we begin to look left and think about now that area of resistance. Basically, this area here now becomes a breakout pullback zone. I want to buy a breakout pullback, right? Buy a breakout pullback off the top of that trading range. What was resistance becomes support. Now, to do that, what I do is look for a two-legged pullback. What's a two-legged pullback? A two-legged pullback is a measured move that goes a bit too far. I want to get underneath that 21 EMA, this one leg. The second leg will be a bit more than a measured move. Think about a measured move, 100% extension, goes a bit too far, right? So 120, 130%, right, on that pullback. Ideally, it'll line up right around the top of that trading range. Could be a bit higher, could be a bit lower. That will give us the general area to now begin looking long. Now remember, this may get crushed back down again. I don't know how far that pullback will go tomorrow morning. What I do know though is if I see a strong breakout like this, overall bull market, this is not where you want to be selling. This is a very low percentage area to be selling because now I have things like the top of that triangle as support, right? I've got the top of that range as support and a lot of bullish momentum to boot there. Same thing again, bears try once. Bears try twice. My problem now is not risk reward ratio. Therefore, a failure pattern is all I need. I can risk small to earn large in that scenario, right? A failure pattern is all I need in that scenario. That failure, of course, then turns into, as we go higher, it will always be that bear trap combination. Now, one cool thing about breakouts is, again, the breakout leg can be used as a measuring leg. So the amount of this big move can now be pinned at that low, and that gives another target we can use up overhead. If you want to make more money, don't trade more often. Hold your winners, add to your winners more often, right? Get that failure, add more on the bear trap, and again, don't go getting out too early. Once you know how these work, measure that leg, pin off that low. That will tell you now how far to leave that runner. Squeeze out as much money as you can out of your winning trades. Guys, when I think about a breakout pullback, this is always what comes to mind. It's a bear trap on the breakout. It's a measured move first target. We don't buy up here, get a two-legged pullback, a bit more than a measured move. We trap the bears into that failure pattern and, of course, into that bear trap combination. And again, larger measured move tells us where to leave that final target. One more type of breakout is a pop and grind. Sometimes what happens is we have this larger range here. This is basically a larger range up here, and we may wind up rotating all the way back to the other side of this larger range here. What that tells me is this market may wind up popping and grinding going higher. We may not get that two-legged pullback and that breakout pullback. The way I work around those is I wait for what we call a pop and grind, right? Pop and grind channel. If it pops up and begins grinding going higher, we covered this earlier in the video tonight of a V bottom, right? V bottoms will V bottom off that low and grind higher. We'll find that channel and buy that first test, right? Same idea here. If we pop up, and again, I want to get that two-legged pullback, right, and buy that breakout pullback. But again, it may not give us that because that bigger range I just pointed out here on the chart. If it begins to grind and go higher, it's a very simple game plan. The hard part is simply don't chase after it going higher. That voice in your head will tell you to keep chasing it. Do not listen to that voice in your head. Mark that trend line off the highs. Bring it down off that low. Then look left, find some prior swings, and wait for that pullback. Now, again, my favorite entries are bear traps, below prior swings, the first test off the low of that channel. Sometimes, though, we don't have a prior swing to work with. It'll get below the moving average. Same idea here, right? Trap the bears in, let them sell short. With this much strength going higher, this is not a place to start selling short, not with that support level right below us. Use that failure into pullback combination. Now, very important here, whenever we get a breakout like this, the breakout leg right there is the first kind of spike, the first pop leg. That will tell you now how big that target needs to be, right? Makes sense? So we're not going to measure the whole entire leg like we do on a breakout pullback. On the first example, it's always that first kind of pop leg, right? That pop up, and they start grinding from there. The size of the pop leg, that's your measuring leg. Pin it right at that low, and that will tell you how far to leave that runner. Again, want to make more money, get better at holding on to your winning trades or adding to your winners as it rolls there with traps and failures and all the setups we're talking about tonight here on this video. All right, guys, now the game plan is set for tomorrow. Remember, tomorrow afternoon, NVDA earnings after the close, so early in tomorrow. Take that profit quickly, get some green on the screen, and be careful in the afternoon because markets do funny things when there's big news after the close here. Now, speaking of tomorrow, remember tomorrow night, no video tomorrow night, but I'll be there tomorrow morning with you guys in the morning trade room. 8 o'clock Eastern time. The easiest way to start making money in these markets is to learn and trade along every morning, 8 o'clock Eastern time. I'll put all the important links you need to join our trade room, get the free video classes, and of course, join me on Twitter X throughout the day here. Guys, hope you learned a bunch in this video. Hope you use this knowledge to earn a bunch tomorrow morning, and hopefully I'll see you sometime soon. Trade with us in the morning trade room, 8 o'clock Eastern time. In the meantime, be well, be nice to the out there. Have a great, great holiday week, and we'll see you guys in the trade room tomorrow morning. We're back on Tuesday night, and we'll go right into the fall trading season, the best time of the year to be a trader, guys. My name is Joseph. Be well. Be here next time. Adios, amigos. Bye for now.